how you doing, everybody? This is Keith McGurk with Remax Southern Shores, and I am joined today by Tim Diedrich, Senior Loan Officer. How you doing today, Tim?
Excellent. Thank you for asking.
Awesome. Tim, what company do you work with?
I work with Edge Home Finance, one of the largest mortgage brokerages in the country.
Excellent. Edge Home Financing, right where you need to be
Right on
right
the money.
now in this real estate market, this mortgage business. You have to be on the edge because there's a lot of new stuff going on. This business of real estate has been changing dramatically over the last couple of years, and here we are, a day before election day, and the hot button issue at everybody's kitchen table. It's pretty cool to be, a part of everybody's dinner conversation. Being in the real estate industry, is how drastically quick, how fast these rates went from 2 and 3% all the way up to, I mean, you see on my screen, 6.99%. Um, so, Tim, there's a way that you guys have kind of come together with a new type of creative financing that helps out the buyer that's looking for a home in today's market with these interest rates. And look, just to kind of set the framework right now, um, I'm still talking to tons of buyers, sellers who are asking me the question, do you have buyers if I want to put my house in the market? I'm sure you've seen maybe a slight decrease in the amount of mortgage applications that have come in, but you're still getting them every day. You're still talking to people. So it's not like these rates have shut us down. A lot of things have come at us the last couple of years, and none of it has shut down the real estate market. Honestly, closings are going to happen, guaranteed, every day, no matter what the rates are. So, Tim, shed some light on what you guys are, what's available from your side of the table to make this 6.99% rate not hurt so much. And what was the rate the first time you bought a house?
Ah, got out of the Army in about 1986. And thanks to the administration at the time, inflation was extraordinarily high as it is, 18.5%. That's
Wow.
18.5%. And I guess your comment, it doesn't matter what the interest rate are, people are going to buy. Maybe they have to buy less. But that's exactly what it was. And we just dealt with it until a refi phase came up.
So that's it. Video over, right? What did you guys do to help the current buyer? The rates aren't 18; they're at 6.99. Go buy a house, right? I mean,
Right. Yeah,
no, there's
exactly.
more. There's more. So tell us a little bit about what you've got here on the screen.
Gotcha. Okay. So in in a reaction to the rising interest rates, lenders, wholesale for us, it's wholesale lenders. They they all have a tag on product, if you will. It's not a specific product, but it's just sort of an addendum where whether it's an FHA loan or a conventional loan or a VA loan, lenders have this 2-1 buy down. There's a 1-0 buy down, there's a 2-1, there's a 3-2-1, several different flavors. But this 2-1 buy down seems to be the sweet spot simply because we think there's going to be a refi boom after after record inflation. Inflation comes down. Typically, there's a reduction in long-term interest rates, mortgage rates. So the way this works is if we go up to our scenario, it's a $200,000 mortgage. Right now, you're probably looking somewhere around 6.99. If it's an investment, it's going to be a lot higher. Maybe it's a condo, it's a little higher. But again, this is not a bad estimate until rates come out today, but they're not out yet. So anyway, this is a 30-year loan, 12 payments a year, monthly principal and interest 1329, total 30-year of payments 360. So if we go down to the 2-1 buy down, basically 699 is the start rate. If you subtract 2 off of that, you're at 499. The 6.99 principal and interest is at 1329. The 4.99 in payment P&I is at 1072. So you see that's $257 a month in savings The total annual savings, $3,082.
That's
Year
a
2 comes al
big savings.
it's a good savings, yeah, but
Yeah,
you can you can do a lot with that, a family can do a lot with that money, that savings.
absolutely.
5.99 would be year 2, again, the note rate, 699, 5.99 here is 1198 for $131 in year 2 savings. If you add up the savings, it's 4659. That is the cost of borrowing at a 2-1 buy down. That is the total cost. Because basically you just take the difference, add it up. So this is the cost. Um, and again, this is the sweet spot because if you look down here, it's like 9,166 for a 321. And that's a lot of money, whether the buyer's paying it or whether they're getting a seller credit to pay the 4659. So a couple year break in the payments. Um, Buyers are liking this. So there is no smoke and mirrors. It is mathematics. 4659 is the total savings. That's exactly what the cost is at the closing table, in addition to standard closing costs.
Gotcha. So,
Gotcha.
very, very important to point out, though. Obviously, nothing is free. It's called a buy down, so you have to purchase the ability to have a lower monthly payment. But that lower monthly payment, when we're talking numbers at a real estate closing, or from my perspective, from the agent's perspective, the negotiating of the deal before we get the contract, I ask my buyers, one question: Are you paying with cash, or are you going to be getting a mortgage? And the reason why I ask that question isn't because a cash buyer has any more power in the negotiation, but because if they're a cash buyer, then I'm concerned about the big number on what the home or condo is selling for. If they're a mortgage buyer, I'm not saying that we ignore the number of the asking price, but the more important number is the monthly payment. So you were just able to get my client a savings of $257 a month for the first year, $131 a month for the second year, a total savings over 2 years of $4,659. And then, like you said, in year three, it goes to that 6.99 qualified rate. But hopefully before they pay that, the rates have come down and they're able to refinance to that lower rate. Um, what do you think the cost, or I'm sorry, let me phrase this better. What do you think the home price would have to be if I was an expert negotiator and my buyer turned to me and said, Keith, I'm not paying $4,659 at closing. I want you to get me this house or condo for that 1,072 a month payment. If it's a $200,000 home, what do you think? I'd have to negotiate 40, 50, $60,000 off the price of the home?
Absolute tens and tens of thousands of dollars. So if you look at a rate stack, you get really low rates at the top and the higher rates at the bottom. Obviously, low rates mean there's probably points. And to get anything close to the 499 in today's market, it is literally tens of thousands of dollars. And that's a
Um,
moving target every day when the rates come out. It'll
right,
be a little different. But anyway, tens of thousands.
right. So you know, even if I was able to negotiate, $10,000 off of a sale price, which is a pretty fair negotiation, I could turn around and say, look, the monthly payment is the most important for you. So instead of negotiating sale price, let's negotiate for the seller to pay for your buy down. So at the end of the day, the seller's more, listen, guys, the seller's just not going to accept an offer of 40 or $50,000 under asking. So I can write that offer request, but we're likely may not even get met with a counter offer, because if the house or condo is priced correctly, which is part of our conversation, you know, think of it. I always tell my buyers, put your seller hat on, right? You're selling this house. You and I listed it. We know that the price is right. And now buyer A comes in and offers 50 grand less. Are you jumping for joy? Are you taking that offer? Absolutely not. So the goal is to get you the house and for the best price. So let's negotiate for the seller to pay this, and so the seller can pay this cost, right?
Absolutely. That's kind of what the market intended it for, is to really benefit the buyer. Now, if a buyer has a whole bunch of money, which typically coming in, they don't. You know, the average buyer, they don't have that an extra 5,000 on top of closing costs. So it's a great use of the seller's equity. Maybe they get a little bit less equity, but they have a good, clean sale, let's
Yeah,
say, and a happy buyer.
very good. Yeah, so that I mean, that's a huge savings. I mean, and that's just stuff that again, it would take way too much negotiating. It would take a miracle. It would be the equivalent of winning I think Powerballs tonight, right?
Yeah,
$2 billion. Um
yeah, right around two
so
billion.
yeah, it's about the same likelihood that you're going to negotiate 50 grand off of an asking price. Um so when you say that the rates are likely going to be decreasing over the course of the next maybe 1 or 2 years, what would a refi cost at that point when it's time to refi?
Um, Given the fact that you get a break on title insurance, you probably don't have to, depending on your homeowner's insurance. It really depends on the size of the house or the size of the loan, basically. But let's just say 3,000 to 5,000 bucks.
Okay, okay. And
And
so again, we're
that
buying a house, and some people who are right on the edge of affordability. Um, you're given the opportunity over the course of 2 years to save that money for the refi. And if me as your realtor have done a good enough job in the negotiating and finding you that house that is at the right value, 2 years from now you may have some built-in equity too, or maybe you'd be able to pad in some of that refi cost too. So that'll
abs-
be all things that could benefit you in the long run, and there's plenty of things that you can use in your back pocket. um, so really what this comes down to is tomorrow's the day. Election day is kind of what put us here, right? This is what we're dealing with across the country is inflation and economics. So if you haven't voted and you've got a problem with this, get out and vote. If you have voted and just realized you might have voted for the wrong candidate, no, it's not a political conversation, but this is why we're here talking about it. These are a lot bigger numbers than they were just a year ago when people were just giddy over getting mortgages at 2%. You hit them with 7% in 12 to 18 months. That's a big change. And yet here you are saying we've got the solution. So that's the way to be on the solution side of things.
Absolutely, Keith.
Cool. Well, Tim, thank you very much for your time. I appreciate it. Tim's information will be included on the email. You guys contact me for any of your home buying questions, and we'll get all of them answered for you. I look forward to working with you guys. Have a great day, everybody.
Have a great day. Thanks, Keith.
Yep.